no matter what. You can't go with what the seller did. You have to do your own research to get what the market is saying, what your income is, what your vacancy is going to be. And I always tell you, work with your property manager, a local property manager, to determine that. I always say the market is a very important factor when you are buying and when you are exiting. They can make a good deal become zero. And the saddest part of this entire story I'm telling you guys is that no one knows what the market is going to look like next year. If anyone had told you that what we are seeing currently in this economy, we're going to see a very significant job losses, we're going to see inflation going up again significantly, we're going to see job growth decline, some of us will say, no, it's not possible. No, with this administration, no, it's going to be this, going to be that. So that's the same thing. There's uncertainty. Nobody knows what next year, next 2 years, even tomorrow is going to look like. Now, let's go to the other cap rates that people kind of understand, but they do not know the implication. This is what determines the value of your property. That is the market cap rate. And the funny part is that you really cannot really project what that will look like next year, next 3 years. So it is guesswork. We always try to be very conservative with that. It's the market that determines that. And there are many factors that play a role in this. Recently, we've seen what has affected the market cap rate is interest rate. Interest rate can directly affect the market cap rate. That is how much people are buying properties. If interest rate is very high, that means people will be buying property lesser because it will be difficult for a property to be a good deal if interest rate is high. We saw that happen last year, last 2 years when interest rate was going high. It was difficult for deals to pencil out. The NOI might look good, but because the interest rate was very high, deals that were supposed to be good now became very bad. So because of that, in the last 2 years, we've seen deals that maybe the value would have been, let's say, 30 million because of interest rate and because maybe the seller is stressed, he really needs to sell. You decide to give a big discount so that the deal can pencil out for the buyer. So a $30 million deal, we've seen it going for 20 million or 22 million. That means they've lost a whole 10 million or 8 million in that deal. These things have effect. So whatever the market, that is your competitors are doing, has a large effect on the value of your property, regardless of how much you worked on your property. I know that goes against everything you've heard about multifamily, but that's the truth. There was a deal that I'm dealing directly, it's an off-market deal. I traveled to PA last week and I went to see the property. Beautiful property. The owner increased rent. The rent was 600. He has increased his rent to 1600. So, and he has significantly reduced his expenses. The NOI is on point. The property is cash flowing. In the last 8 months, it's an 85 units. In the last 8 months, the owner of property has been paid about 500,000 as cash flow, and it still has reserve, significant reserve. Oh, guess what? This was well taken care of. His cap rate for the property is up, but the market on its own did not move, did not change. The market is a 7 cap. That is, people are selling at that rate. One, really because of interest rates has impacted it. Not just interest rate, performance, whatever it is. It might be a distressed market. People are just selling for 1 cent on the dollar. Whatever that is can impact. So the market is telling a different story. On a normal day, if the market cap rate was about 5%, because the lower the market cap rate, the higher the value of the property. So imagine if the market cap rate was at 5%, this guy's property would have been worth 16 million. But because the market is at 7, the property is worth 11 million. You can see the difference. He has done everything. The property has done well. The performance good, but the market cap rate is there. And this is what the lender is also going to look at, because they're going to do an appraisal. Before a lender will give his money, he's going to appraise where the market is at. What are people doing? Compare with yours. Then they will come up with a value and say, this is what your property is doing. Pay attention to this. This is a very, very important factor that people do not understand how it works. And sometimes people do not understand the difference between this and this. This helps you understand if your property is doing well. This one is really what determines the market value of what your property should be selling. So as a buyer, if you are buying this, you need to try to educate sellers, because sometimes they come from this perspective. Oh, my property is a 4 cap, but your market is at 6. So based on this, your property is at this. most times I found myself educating brokers and also educating owners on what is making me give you a low ball offer. It's not because you didn't do well, it's because the market is somewhere else. I always say the market is a very important factor when you are buying and when you are exiting. They can make a good deal become zero. And the saddest part of this entire story I'm telling you guys is that no one knows what the market is going to look like next year. If anyone had told you that what we are seeing currently in this economy, we're going to see a very significant job losses, we're going to see inflation going up again significantly, we're going to see job growth decline, some of us will say, no, it's not possible. No, with this administration, no, it's going to be this, going to be that. So that's the same thing. There's uncertainty. Nobody knows what next year, next 2 years, even tomorrow is going to look like. So how do we mitigate, or how do you approach this? Okay, somebody asked a question. Do lenders have different DSCR multiples that needs to be achieved based on the class of the property? Yes, based on the risk. So every lender is different. So that's why I use brokers. I have access to speaking directly to lenders, but I try not to do that because they might not be giving me the best deal, whereas I have other options to meet other lenders. So a broker will help you, give you multiple options. That's why I use brokers for mine. Different lenders with how much risk they can absorb. Some lenders are aggressive, they can absorb a lot of risk. Some lenders, they cannot absorb any risk. Some lenders are just in between. So you need to know where those lenders are and see how you can fit. And again, the class of the property. Some lenders sometimes flexible with A class, B class property in a good location. Some lenders, if the agency loan, they have no issues with class C, especially if they meet the requirement, that is the population in that market, how the property is performing and all that. Those things will determine, and if you have the experience, because agency requires more of who is managing it, and that is what will determine. So lenders are different. I have deals that their DSCR is 1:1. They're only interested in you breaking even, but they can give you a loan terms that says year 1, okay, if you break even, because I understand you're executing your business plan. But year 2, I need you to get to 1.25. So depending on the loan agreement, they will tell you. And some from get-go, they are telling you need to be at 1.30 from day 1, and you have to retain that. And they'll give you a milestone. So it's important that you're also reading the loan agreement. What is your lender saying each year? What do they require from you each year? Most times people just sign. They do not even know what are the requirements from the lender. So every year, every quarter, depending on the lender. For bank loan, CMBS loan, those ones, they require you to report every year. For agency loan, you report every quarter. They want to know what you're doing at every point in time. So back to what we're saying, the lenders are different requirements. And the loans, the property, so many things determine what kind of DSCR they'll be requesting from you. Sometimes the experience, if you're not really experienced, they know it's high risk for them, they might increase your DSCR. Sometimes if they know you are strong, you can do that. They're okay with 1.25, but the standard is 1.25. So I hope that answers you. So like I said, the drivers, income, expenses, and financing are very important. And also I've been able to explain to us really about the market cap rate and all that. So let me show you the implications. So like I said, this is not an underwriting class, but it's important that you understand how each of these fall into place. Back to what I was saying, if you get a deal from a seller and you want to underwrite it, first of all, you need to identify this first column. What I normally do is to identify what exactly has the seller been doing in the last 1 year. Then I'll break it down. What has it been doing in the last 3 months? Because it's possible that the last 1 year he was doing not too good. So I want to check the last 6 months and the last 3 months. Those things are very important. So I want to know where he is currently within the last 3 months, where he is currently within the last 6 months. When you get a T12 is trailing 12, that is the last 12 months. In quotes, it's called profit and loss statement. Once you receive that from your seller, I always put down the first column. I want to identify where is the market at. The seller is saying the market is here. Oh, this is his vacancy. This thing tells me the story. Oh, what are the opportunities here? From what I see here, I see that the guy is doing well with his vacancies and his concessions, loss to lease, and bad debt. So in my mind, my other question is, what are the opportunities? Because I just don't want to buy a property without looking for the story or the business plan around it. What am I buying this property for if I can't see any wiggle room to do something? So the next thing I'm going to do, I'm not going to take the seller's word for it. I need to understand for myself where the market is currently at. So the seller is saying that the gross potential rent is this. I will do my research and find out where exactly the market is, and I'll create my own column. So another thing I also need to identify is the vacancy. Now the seller is telling me is here. Now I'm not going to say trust but verify. That's what I will do here. The thing I'm going to do is verify with the market. Where is the market? What is the market doing? Where is the market at in terms of vacancy? So if the market is at 95%, it shows that, yes, this is where the market, that means if I do everything right or do what the market is doing, I should be able to achieve this. But let's say the market is at 90, 89, and this property is 95. I'll be curious to know what exactly are they doing differently that is making them achieve this, whereas other people in the market are not achieving it. So this will raise my eyebrow. The next question I'm asking is, I'm going to start looking at the leases. I'm going to start looking at where did each tenant, what month of the year did they come? I want to see where that bump started coming from. So peradventure, if I'm looking at the T12 and I look at the first earlier month of the T12, I'm looking at it and it's showing that everything was on this level. Then comes 6 months after, because the seller wants to sell, the thing went like this. I'll question that. And the reason why I'm going to question that is my assumption is it because you're selling, you're trying to push some things that are not achievable? You're trying to increase rent and you know that there's going to be a pushback, but you're just doing it anyways. I want to understand what is leading the push. So the next thing I'm going to do is, has the market increased? Or did the market increase in the last 6 months? Or is that why the seller increases rent? Or he's just doing this on his own? He's in his own box, doing his own thing because he wants to sell. Because truth be told, once you buy the property, you start to face the reality. So it's important that you're comparing your rent and looking at the T12 critically to know where there was a shift or where there was a spike or where there's a decline. I always tell people numbers. When I look at the profit and loss statement, it tells me what exactly is going on in that market or on that property. When there is a decline, there's a part you can see. If I'm looking at the T12 and the first 3 months, 4 months, 5 months steady, and I see that in the 6 months there's a decline, it shows me that the rent has flattened or the rent is zero. That means there's no rent growth for that period of time. The next question I'm asking is, what's going on? What's bringing about? Is it the economy? Is it interest rate? Is it inflation? What is influencing a rent decline? So there's a lot to do when you're looking at underwriting. So that's why if I'm underwriting, it takes me time. It's not a quick fix for me. Sometimes I take 1 month. That's if I have time. But if I don't have time, let's assume they accept my LOI. I'll really go deep into it. But if you accept my LOI, does not mean I should sign an agreement with you. Right? So while I'm trying to do the PSA, I'm digging deeper into it to understand exactly where the opportunities are and where not. So back to what I was saying, this thing should tell you where the opportunities are, if any. And if they are not, then why are you buying the property? Because this is a value add. Why am I buying the property if I can't increase my income? Okay, let's assume the income is okay, you can't increase it. And I go to expenses. Okay, are they spending so much? And I see the opportunities that I can really manage this property and reduce costs. It's possible that there's no value in the income. It's very possible. But it's also possible that the expenses can be properly managed and it brings about an increase in the NOI. Remember what I said, the NOI is the most important thing in this entire thing. So the next thing I'm going to do once this whole thing is sorted out, these are the drivers of my underwriting of what a multifamily should look like. Let's assume everything here is good. The next thing I'm going to do is to check my projections. Now, I'm going to go to this part of it. Let's say I've done my own study, I've done my own underwriting, because I'm not going with what the seller did, no matter what. You can't go with what the seller did. You have to do your own research to get what the market is saying, what your income is, what your vacancy is going to be. And I always tell you, work with your property manager, a local property manager, to determine that. I always have a column. So this, my second column, is I've not discussed this with my property manager. I'm doing it based on my experience of the market. I have a similar property in that market. This is how that property is performing. This is what this one should also look like. So I'm doing it based on my own experience, which is not detailed because it's possible that that market is slightly different from mine. So I'm doing my projections first to see what that will look like. So in this place, if you look here, you see the advertisement there at 43,000. But this is an opportunity for me. I'm looking at it, I'm like, no, I can spend very low amount and achieve better results. I don't need to spend 43,000 on my advertisement to attract the right traffic and people to my property. I will wrap up with this, answer any question anyone has. Then next time we can talk about the rent projections. Then we'll now do stress test. What are the implications of all these items I've listed? If this goes wrong, will the deal still stand? If this goes this way, will this deal still be good? If this happens, because you need to create assumptions, scenarios. If this happens, what will happen to my deal? Occupancy might not just be the only thing that can break your deal. Interest rate, if you don't have a fixed rate, let's say it's variable, that can destroy your deal. You having a wrong property management company can destroy a good deal. So you need to stress test in every category. What would this look like if this is bad? Once you're able to determine that, you'll be able to know, okay, how can I make this deal work and prevent this from happening in the future? For those things you can control, because you don't have control to all the problems. Like property management problem, you have a control. Interest rate problem, you don't have the control. Policy problem, you have no control. Tenant quality, you have the control. You can take them out and get new tenants. Different things. So we're going to do that next time. We're going to go deep into rent escalations, expense escalations, how you should look at it, cap rate escalations, the effect of the market cap rate, what would that do in the next 5 years, how you should position your assumptions on that properly. And we're going to also do a stress test. But in this case, let me wrap up with this by saying that do not take anything that the seller gives to you, regardless of whether you think you're right. Go and do your own findings. Find out what the market is in terms of income, where the market is in terms of their vacancies. Investigate what the tenants are on the property. Do they have an issue of not paying rent? If they do, that means your delinquency is going to go up, your vacancy is also going to go up, your bad debt is going to go up, your legal fee is going to go up. So you need to check out all these things and how it's going to affect your deal and create your own assumption. I have some questions here. One person is saying, this is why we need to do deals with BB. Okay. Thank you so much. Not a lot of operators know this, nor do they truly understand this. And that's the truth. Not everyone, like this cap rate thing, I've seen many misconceptions on how people talk about cap rates. But the truth is that the market cap rate is very, very important. For me, in my own opinion, because I want to sell is even more important than my property's cap rate at that point. Thanks so much for the education. We will be able to have a copy of this to study. It's going to be on YouTube. That's why I asked you guys to subscribe. So I'm going to put it on my screen again. For those of you that has not subscribed, please go and subscribe on YouTube, because we're going to all these things on our YouTube channel for you to go and rewatch it. Guys, this thing took me years. I started my cleaning business in 2009, 3 years after I was managing properties. So I've been in this for a long time. So it's not a knowledge of yesterday. It's been an accumulation of different knowledge overseas and in the US, combination of all that. So everything, I'm fusing them into one and transferring it to you. It might be difficult for you to get them all in one day. So it's important that you subscribe to my YouTube page and go and listen to them over and over again. And you can ask questions there, because I read comments. If I see comments there, we always respond to them. If I don't respond to them, my team, they're always there to respond to them. So please, if you've not subscribed, please go right ahead and do that. Subscribe and please like. Help us increase our views. It will help us, and share. And I'm sure you'll be good. Like I said, it's not everything you pay money for, really. And it's so unfortunate that things that people do not pay money for, they don't appreciate it. That is why we've gone ahead. We'll be releasing our paid platform. You know, some people, when they start paying for something, start to appreciate it. So if there's anyone here that wants to be the person to ask the last question, please signal. You can type it or raise your hand and we'll bring you up to the stage. And I'm really happy to see a lot of people today, and I hope this was very useful to you. My hope is that you take this knowledge and use it. Or if you're not active, this knowledge will help you invest better. You will not be giving your money, or you'll be investing in better deals because you're asking the right questions and you're seeing the errors. No matter how much they sugarcoat it or they paint it, they make it look all pretty. You're seeing it from so it's just important both ways, regardless, whatever investor you are. Which of the market do you deal into? When I started, I was in 5 markets, but because of the experience I've had with those markets, I decided to trim it down to my goal. What exactly am I looking for? My investors looking for? I am in the Pennsylvania market and in the Dallas market, and they're for 2 different reasons. One of them is about cash flow. I can get significant cash flow from that market. The other one is about some cash flow and appreciation. So depending on my investors, that is how I do it. But for me, I invest in both because they both give me different values and they meet my goal. So I'm not saying you should invest in those markets, but I'm in there intentionally because it aligns with my investment goals. And that's one thing you need to identify. What are your investment goals and what market can you achieve your goals? So if you are looking for appreciation, California is your best bet because the way things grow in that market, New York, New Jersey, those are your, if you need very fast, quick appreciation. I always do my fix and flip most times in California because I always get good returns from them. But if I'm looking for multifamily and stuff, no, I don't invest in California because of so many things. The rules, regulations, it's very difficult to cash flow in the California market because of sometimes the rent cap. They put a rent cap that you can't go above. If I can't go above, then how do I make money? So it just depends on your goal. I think that's the last question for today. Thank you all for taking our time to be with me today. This replay is going to be on our YouTube in some weeks, but the one we did the last time is going to be there, I think, next week. So look out for it. Thank you all and have a beautiful day. Don't forget to subscribe.